Well, hello and good afternoon. Great to have your company. I'm James Preston with you live from Kalkine Studios in Sydney. It's lunchtime here and you know what that means. It's time for the Mid-Market Pulse. In today's show, we'll focus on the Australian share market performance along with headline-grabbing stock news. We'll also be talking about Australia's most valued company returning $6 billion Australian dollars to its investors. With a record-breaking run on Wall Street and bumper results by the CBA early in the morning, the equity markets in Australia continued their record-shattering rally, extending gains for the sixth consecutive session. The overall sentiment in the market was a bit negative though, as more sectors were trading in the red than in the green. The concerns over rising COVID-19 cases also restricted the market's gain. The benchmark index, ASX 200, was trading at 33.30 points, or 0.44% higher. Regionally, the Asia-Pacific market was trading mixed today. Japan was up, while New Zealand equity were red. The rising coronavirus cases in New South Wales, which remain unabated despite a prolonged lockdown, also weighed heavy on the market sentiment. In the past 24 hours, the state has recorded 344 new cases. The Melbourne lockdown has also now been extended for 7 days, which could have serious economic repercussions. Meanwhile, the World Health Organization is calling for $7.7 billion that officials say is urgently needed to help low-income countries survive the Delta COVID variant by providing vaccines, oxygen and further medical care. Dr. Bruce Aylward, the senior advisor to the WHO's Director General, told a Q&A session that the funding will go toward the WHO's access to COVID-19 tools, or the Accelerator program, which delivers critical medical supplies across the globe to combat COVID-19. In positive news from the Asia-Pacific region, where most of the countries have been going through a severe third wave, Singapore's government has raised its 2021 growth forecast from 6% to 7%, from its previous projection of just 4% to 6%. Moving on to the sectoral front, and the materials sector topped the chart with a 1.5% gain, followed by the financial sector and energy sector, which both rose by around 1%. Consumer staples and utilities also traded marginally higher. Meanwhile, yesterday's biggest gainers, IT stocks, were the worst hit today, as the IT sector declined by around 1.45%. Despite bank earnings and a robust Wall Street pushing the Australian markets, the overall sentiment in the market was quite flat, with only 5 sectors trading in green, while the remaining 6 were in the red. Investors seem to be buoyed by the much-anticipated quarterly earnings call of the Commonwealth Bank. And now, before we take a look at more trending updates, it's time for a very short break on the Mid-Market Pulse.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Hi, welcome back. James Preston with you on Kalkine TV, and you're watching the Mid-Market Pulse. Let's turn our attention now to the biggest gainers and losers that captured investor attention by noon. A large part of the surge was contributed by Australia's most valuable company, the Commonwealth Bank of Australia. The nation's largest lender on Wednesday announced a shareholder bonanza worth 12.2 billion Aussie dollars. The firm will buy back up to 6 billion Australian dollars in an off-market buyback, and will pay another 6.2 billion Australian dollars in total dividends for the year that just ended. The Sydney-based bank was the third of the country's 4 biggest banks to detail capital management plans, as it delivered far more than its peers. In fact, it delivered more than double that of its biggest rivals. ANZ and NAB last month had said they would buy back shares worth 1.5 billion Australian dollars and 2.5 billion Australian dollars respectively. Australia's largest lenders, which have about 30 billion Australian dollars of surplus capital, are starting to join their global peers in handing back payments to investors, after regulators eased constraints that were implemented to safeguard banks from a COVID-19 induced hit last year. The CBA also reported that its cash profit rose 20% to 8.65 billion Australian dollars for the year to June 30 as the economic recovery gathered pace and bad loan costs fell. The biggest gainer in the Australian markets by noon was fintech, as its shares rallied by 5.15%. Even as Commonwealth Bank came out with stellar results and its shares touched all-time highs, the bank failed to make the cut into the top 5 gainers on the ASX. On the flip side, Megaports was the top loser, falling 6.2%. Some of the other worst performers were Mineral Resources and Seek, amongst others. Gold stocks witnessed selling pressure today as prices of the yellow metal dipped to their lowest levels in months. Gold prices declined to over a 4-month low as strong US labour data boosted expectations for an early tapering. The gold prices in London stood at $1,723.35 US dollars an ounce. Meanwhile, crude oil, which was under some selling pressure, has reclaimed the $70 a barrel mark as the commodity tried to partially recover losses. Let's now turn our attention to the world of crypto. The cryptocurrency market witnessed a slight sell-off in the morning after the Joint Committee on Taxation estimated that cryptocurrency tax reporting provisions would raise about $28 billion US dollars to fund the country's $1 trillion US dollar infrastructure expansion plan. This led to some cryptocurrencies venturing into the red by overnight. Well, that's all for now. Keep watching Kalkine TV as we bring you the latest news and trending market updates live from our studios in Sydney. I'm James Preston, signing off for Kalkine TV.